We have explained that theoretically GSTR 3P, GSTR 1 and GSTR 2 and GSTR 93. We will take up an example and we will discuss the what will be coming to the GSTR 3B and what we need to disclose in the GSTR 1 and what will be auto-populated which is coming to in the GSTR 2A. So take an example. And a trading account is a detailed trading account I have made it is not the summarized trading account is a detailed trading account to understand better for our discussion. Taken it is a company called an XYZ company. Normally we'll have in the sales. Then it is in a purchase, we're having in a purchases. You assume that there is no stock and all, and so it is a simple thing, sales, purchases. And we will end up with a cross loss. So if you take an example of the trading account of the XYZ company, we have mentioned an sales. So these are the invoices, list of the invoices under the sales. It contains the taxable value, tax amount. It's an 18%. If there's a 18% tax rate, so tax amount will be 18% into the taxable value, and you will have an invoice value. It's the sum of the taxable value and the tax amount. Okay, this is in the total of the we made you take in a month of April 20. This month of April 20. So we made 8 sale invoices in that particular period. So total amounts to 33,310 and the tax amount is amounts to 5,986. And similarly, so correspond to the sales, definitely it take an example of it. It is in a trading, it is in a purchasing, it is in a trading business. You obviously will purchase and then you made a net sales because there is no stock, because there is no raw material, no consumption. It is just an purchasing entity. It is another purchasing business where they will purchase the items and then they will sell it to other persons. So you see that purchases, it is not the list of the purchasing invoices, 6 purchasing invoices they have made, which contains the having a taxable value for each purchasing invoices and also the tax amount, the same 18%, and also the invoice value that we have made. So this is my total sales made for the particular period and the total purchases made in that period, and this is the gross profit. With this an example, we will explain the what under to be disclosed in the GSTR 3, GSTR 3B, GSTR 1, and also the how it auto-populated, how it will be auto-populated in the GSTR 2A. I told the GSTR 1 as we discussed first we discussed GSTR 1, 3B and then we discussed the GSTR 2A. In the GSTR 1, it is a stop for. You have to discuss the list of invoices of outward goods and supplies. You see, these are the outward goods and outward supply of the goods and services. So we have to disclose at the GSTR 1, which was highlighted in the orange color. So these are all taxable value, tax amount, invoice value we have to disclose in the GSTR 1. It can be code weights, state weights, it can be in a different category. But it is like the finally we have to disclose invoice with it is a detailed. I told the GSTR 3P there are summary, GSTR 1 was a detailed one. There we have to disclose the invoice wise, what is my taxable value, what is my tax amount, what is my invoice value. And coming to the GSTR 3P, it is a summary where you will contain, I told, what is my taxable value. If you see I was highlighting in the yellow color, we will disclose the total amount. We will not discuss individual amount. We will discuss a consolidated amount. What is my taxable value? What is my tax amount?